Hello again, and welcome to our look at the upcoming January 15th trading session. In front of you is the economic calendar as per usual. A couple high-level announcements coming out of Australia involving employment. Probably won't move the markets much beyond the Australian dollar. But after that, we have PPI coming out of the U.S., initial jobless claims. Initial jobless claims probably will be the biggest mover of markets. In that particular case, we would anticipate seeing the U.S. stock indices and the U.S. dollar being moved. With that being said, you can see that the S&P 500 dropped immediately during the session, but is starting to find a little bit of support near the 2000 level, which of course is a positive sign. Probably going to continue to consolidate between 2000 and 2060 or so. So we like buying calls on dips, but for short-term trades only. You can see that the euro continues to hang just below the 1.18 level. At this point in time, not overly pressed to be involved. Would like to see some type of bounce that we could sell or buy puts in, but right now it just looks like a pretty flat market. Over in silver, we've had a fairly interesting move. We fell all the way to 1650 during the session, then turned back around to form a nice looking hammer. The hammer, of course, suggesting support, so we may actually make a run towards 1750, breaking above the highs from the previous session. The Tuesday candle, of course, would be the signal to start buying calls. And finally, as we mentioned, the Australian job numbers, the Aussie dollar has fallen below 0.81 during the session, but has turned back around to form a hammer. Looks like we're trying to form a little bit of a base here, maybe to get a bit of a bounce. It should be noted that 0.80 is a massive area on longer term charts. Because of that, it's going to find support every time we get closer to that. So short-term dips could be call buying opportunities. And with that, we've taken a look at the January 15th trading session.